Dear Chartered Accountants, working professionals and students in the domains of Indian auditing, accounting and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant. Daily news and updates for 4th August 2023. Results of the CA Foundation June 2023 examinations are likely to be declared on 7th or 8th of August. The 51st GST Council met under the Chairmanship of Union Minister for Finance and Corporate Affairs Smt Nirmala Sitharaman via video conferencing in New Delhi. The GST Council in its 51st meeting recommended certain amendments in the CGST Act 2017 and IGST Act 2017, including amendment in Schedule 3 of CGST Act 2017 to provide clarity on the taxation of supplies in casinos, horse racing and online gaming. The Council also recommended to insert a specific provision in IGST Act 2017 to provide for liability to pay GST on the supply of online money gaming by supplier located outside India to a person in India for single registration in India for the said supplier through a simplified registration scheme, and also for blocking of access by public to any information generated, transmitted, received or hosted in any computer resource used for supply of online money gaming by such supplier in case of failure to comply with provisions of registration and payment of tax. The Council also recommended that valuation of supply of online gaming and actionable claims in casinos may be done based on amount paid or payable to or deposited with the supplier by or on behalf of the player, excluding the amount entered into games or bets out of winnings of previous games or bets and not on the total value of each bet placed. The Council recommended that CGST Rules 2017 may be amended to insert specific provisions for valuation of supply of online gaming and supply of actionable claims in casino accordingly. The Council also recommended issuance of certain notifications or amendment in notification related to the issue. It was also decided by the Council that effort will be made to complete the process of making amendments in the Act at the earliest and bring the amendments into effect from 1st October 2023. The Department of Expenditure, Ministry of Finance has launched the scheme Vivad Se Vishwas 2 contractual disputes to effectively settle the pending contractual disputes of government and government undertakings. The scheme was announced in the Union Budget 23-24 by the Union Finance Minister. The scheme will apply to all domestic contractual disputes where one of the parties is either the Government of India or an organization working under its control. Under the scheme, for court awards passed on or before 30th April 2023, the settlement amount offered to the contractor will be up to 85% of the net amount awarded or upheld by the court. For arbitral awards passed on or before 31st January 2023, the settlement amount offered is up to 65% of the net amount awarded. Government e-Marketplace or GEM has developed a dedicated web page for implementation of this scheme. Eligible claims shall be processed only through GEM. For non-GEM contracts of Ministry of Railways, contractors may register their claims on IREPS website at www.ireps.gov.in. The details of the scheme are available on the website of Ministry of Finance, Department of Expenditure. Optimistic about the economy's potential, S&P Global expects India to grow at an average 6.7% per year from financial year 24 to financial year 31, with capital expansion seen as a dominant driver of growth. This will catapult GDP to $6.7 trillion from $3.4 trillion in fiscal, adding that per capita GDP will rise to about $4,500. However, a higher share in manufacturing and improvements in labor force would be key to this. Success will ultimately depend on India's ability to reap its demographic dividend and increase labor force participation, including skilling, boost private investment with structural reforms in land, logistics and labor, and increase competitiveness driven by foreign direct investment. Geopolitics could provide considerable tailwinds. The S&P Global report also highlighted that digital infrastructure is another potential driver for high growth. According to the minimum public shareholding rules, a listed entity with a market capitalization of more than rupees 1 lakh crore must reach the 25% minimum public shareholding threshold within 5 years of listing. The Life Insurance Corporation of India is likely to get more time to comply with norms that mandate a 25% public float of its equity. According to a report, LIC may require 5 to 7 years to issue more shares to the public. Initial discussions are being held internally with the Finance Ministry on the matter. LIC is an exceptional entity and it may be impossible for us to abide by the norm by 2027. The appetite of investors and market sentiment needs to be considered. We have to increase the float gradually, a Ministry of Finance official said. The much anticipated privacy bill, referred to as Digital Personal Data Protection Bill 2023, was tabled in the Parliament. Once enacted, it will enable individuals referred to as data principals to govern their own personal digital data and will drive enterprises referred to as data fiduciary to process personal data of individuals in a lawful manner for specific purposes only. In view of the bill's extraterritorial coverage, enterprises based outside India serving individuals in India will also be expected to adhere to the provisions of this bill once enacted. Enterprises will have to review the current ways of working, especially for the personal data of individuals such as their employees, customers, merchants, vendors, etc., to be able to honor the rights that individuals may exercise, such as the rights to access, update, erase their personal data, etc. Non-adherence of obligations listed in the bill may attract sanctions and commercial penalty as high as Rs 250 crore. The SEBI had issued multiple circulars, directions and operating instructions for alternative investment funds on a regular basis for necessary compliance. In order to ensure that all market participants find all provisions at one place, Master Circular on AIFs has been issued. The Master Circular is a compilation of all the existing circulars and directions issued by SEBI up to 31st March 2023 for AIFs.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.